Okay, we are live. Hello, everyone. I am Julia Carlson. I'm the CEO and founder here at Financial Freedom Wealth Management Group. And I also have with me DJ. DJ, tell us
Hey,
what you do
everybody.
here.
Yeah, I'm DJ Wright. I'm a wealth advisor and our portfolio manager here at Financial Freedom.
Yes. So, hey, let's talk about these crazy markets because the beginning of 2022 has not been like the last 22 months. I think we've had a pretty solid, smooth ride. So
Right.
what's going on with these markets?
Pretty wild. Well, in just these last 2 days, including today, I mean, it's almost like one of those things where you should just sleep in, right? Not look at anything. You'd miss all the craziness. But yeah, first off, we just want to also acknowledge that we know it's never easy to watch this, right? To see your accounts move up and down. It's not fun. And so we are here if anybody wants to chat things through. We're definitely here. But
Yeah,
what's going
absolutely.
on? Yeah, tell me what's going on, Julia.
Yeah, absolutely. I think it's, this is our life, right? So we watch the stock market every day go up and down. We're comfortable with the volatility. We actually think when it's not volatile, it's there's something wrong. And so when we've experienced the last 22 months of pretty much up with very little volatility, we kind of like, all right, it's got to come back at some point. Well, now is the time. So just like you said yesterday, it was a 5% swing from the pullback. The Dow specifically was down over 1,000 points and then ended up over 100, which pretty wild swing. And I think the S&P was very similar to that.
Yeah, I have a stat on that actually real quick, Julia. So
Yeah,
S&P 500, it was down 4% at one point and then it finished in the green. So it was almost a 5% swing. It's only ever happened 3 times in our history. The other 2 were in 2008. So this is a pretty wild volatility that we're seeing.
Yeah, I remember that actually in 2008. It was pretty scary because back, I think the numbers, as the markets over time, the numbers get bigger. So you see bigger numbers, but when it happened back then, it felt more drastic. It was a different energy than it is now. I know that for sure. So I don't think that we are going into a recession here. And I think we're just seeing, with these incredible comebacks, that it's just volatility is back here. And I love this quote about market volatility. It isn't an illness or a sign of something broke. It's a reflex. Like the markets are supposed to go up and down. It's how they work. So, and the other thing is, which relating to what we just talked about, is history doesn't repeat itself, but it does often rhyme. So, when we feel these pullbacks, I would encourage investors to, we know what's on the other side of pullbacks. The markets go down, they come back up. We've seen that over and over in history. And just like we saw in the beginning of COVID, where it was the quickest, fastest pull down. I like to say we take the elevator down and the escalator up. I think we're seeing that, but every time the markets have proven to be resilient. So, all right, what's causing all this volatility? Let's talk about that.
Yeah, so I mean, anytime with the markets, it's never just one thing. There's always a handful of sources that affect what they're doing. But I think most of us can agree that the main culprit here is inflation. It's the highest it's been in about 4 decades. So there is a lot of spooked investors. And then you've got the Federal Reserve that is taking it seriously, and they're taking action as we speak to curb that and make sure it doesn't get out of hand. And so that's also, another reason, right? They're pulling back the support that they've been, giving the markets. And so that's, I think, the biggest one. You've also got COVID. We're still in the middle of a pandemic with, supply chain shortages. You're hearing a lot about that. So that's still very real. You've got this whole Ukraine conflict, right? That we'll see what happens there, but it's just another piece that's kind of sprinkled on to get people spooked. And then I think the biggest thing that you were mentioning, Julia, also is just it was time, right? We were due for a pullback. It was needed. We didn't have one last year, and so it could have been anything that would cause this kind of start it.
Yeah, it'll be interesting. The Fed is going to come out tomorrow and give us comments on their meetings that they're in now. And I think this market is starting to price in potentially an interest rate increase in March. Like, a year ago, they were talking about interest rate increases at the end of 22 or 23. And so now to see this happen quicker is a sign that the economy is strong, actually. So it's actually a good thing that the Fed is going to raise rates. We need that. We need rates to go up for us to be able to withstand a future recession and to give back the Fed tools that they need to manage the money supply. And so it's like it's important that these things are happening. But it does provide more volatility in the short run. I love this quote. Just remember that the market, like most things in life, is more fragile in the short run, but much more resilient over the long run than we give it credit for. So it was actually LPL, Burt White, who's in the kind of oversees the research department, tweeted that out. So I just love that quote. I wanted to share that. And I think we can move forward with some good news. Like, we're on the beginning of earnings seasons here in the first quarter. And I think we're going to see companies showing strong earnings and showing profits. And that will help create, the market performance in the market moving forward here. Any last thoughts from you, DJ?
Yeah, I mean, so what do you do about all this? I mean, really, you don't need to do anything. So like we've mentioned, this is very normal. And in fact, so if you're looking at the S&P 500, and this is on average, it pulls back 5% three times a year. And one of those on average is a 10% or more pullback, which is basically what we just saw. So again, this is very normal. Just stay the course, keep doing what you're doing. If you're building your retirement, keep adding, right? Everything's on sale right now. If you're in retirement, don't panic, don't sell, just stick with it and you'll be okay.
Yes, it's never as bad as it seems. So stay calm, stick with your plan. And I love that advice, DJ. If you are building that retirement portfolio, if you're a ways at, get excited about these opportunities and invest more when the markets are down. You'll buy more shares and you'll see that increase when it recovers. And I would also say, I am finding, and maybe you are too, DJ, in your meetings with clients, is they have a lot in savings. And so now, yes, it's important to have that emergency fund and have those savings. But if you have too much, then think about adding to your investments and get that money going to work for you. So, all right. Any last thoughts?
No, that's it. Good stuff. Good advice.
All right. Well, we are here for you. If you have any questions, you can post them under this video, and we're happy to jump on and do another video and answer any questions. If you do want to talk to one of our wealth advisors, you can head over to our website and schedule a complimentary consultation, and we'd be honored to help you. If you are a current client and you want to talk to your advisor, reach out. We will get that appointment scheduled, and we'll talk through your personal situation. So with that, I wish everyone a great week, and we'll see you next time. Bye.
Thanks, everyone. Bye.